Hello everyone, this video is going to cover exercise 1411B, preparing the schedule of cash payments for selling and administrative expenses. So the controller for the Braddock Laundry Services prepared the following list of expected selling and administrative expenses. All expenses requiring cash payments are paid for in the month incurred except for salary expense and insurance. Salary is paid in the month following the month which it is incurred. So any salary expenses earned in the month of January will be paid in February. And the annual insurance premium is paid in advance on January 1. So that's telling us that we're paying for the whole year on the 1st of January with cash, even though we're only incurring that expense over those 12 months. January 1st is the first month of operations, and accordingly, there are no beginning account balances. All right. So they have already given us this, what we're going to budget. So we don't have to do that like we did in the example 14A demo problem. So these are here. So we just have to figure out what are we actually going to pay. All right, so we need to complete the schedule of cash flows, complete the schedule of cash payments for our selling and administrative expenses. So the first thing is our equipment depreciation for January, February, and March. We know that our equipment is going to depreciate $6,200 each month. But what cash are we paying for that? Zero, because we don't pay cash for depreciation. So that just goes zeros across the board. All right, now we've got the prior month's salary expense. So we know that we're starting in January, which means there was zero salary in December. So now what we've got to do is figure out, okay, for February, what was January's salary? Well, January salary was $8,000, so that's what we're going to pay off in February. And then whatever February's was, that's what we're paying off in March. So we come up here, find out that it's also $8,000, so we pay off that $8,000 in March. And then you can see that if they asked us what is our salaries payable, we would still owe $7,200 worth of salary at the end of March. All right, so next we need to look at our cleaning supplies. So if we come back up here, where are our cleaning supplies? That's right here. And those we pay off every month because they told us that the only things we don't pay off are salary and insurance. So we just need to bring the 1,000, the 940, and the 1,100 down for each month. So in January, we pay $1,000 for cleaning expenses or cleaning supplies. In February, we paid $940. And in March, we paid $1,100 for those cleaning supplies. All right. Insurance expense. So they show that we are expensing $600 every month for insurance expense. But they tell us that we paid the entire annual premium. We paid the entire annual premium on January 1st. So if we allocated $600 per month, but remember it's a 12-month contract, so we need to take that 600 times 12, and then that gives us $7,200. So that's what we paid in January, because remember, we're paying the whole thing off in January. Even though we allocate it over 12 months, we're paying it in advance. That means we paid it all in January, and we have zero to pay in February and March. Our equipment maintenance expense is just going to be what they show us, which is $500 each from right up here. Same thing for our lease expense. We find that our lease expense is $1,600 every month. And then finally, our miscellaneous expenses, which again, we have $400 worth of miscellaneous expenses every month. So now you can see that when you add those up, your total payments for selling and administrative expenses in the month of January is $10,700. In the month of February, it's $11,440. And in the month of March, it's $11,600. So that's part A. Part B says determine the amount of salaries payable the company will report on its pro forma balance sheet at the end of the first quarter. We kind of already talked about that. If we look back up here, we've paid off our salaries expense of $8,000. That's gone. We paid off that $8,000. So all that we have left is the month of March, which would be the salary expense incurred at March is what's due. So our salaries payable, if we want to put that, salary expense is equal to the March salary expense or salary expense incurred. Which is $7,200. And that's all that part B is asking for. So for part C, determine the amount of prepaid insurance the company will report on its pro forma balance sheet at the end of the first quarter. All right, so we got to figure out, okay, how much did we prepay minus how much have we used? So since the premium is prepaid on January 1st, so we prepaid that 700 or 7,200. Oh, that's the same amount as our salary expense. That's fun. On January 1st, we now know that the amount at the end is going to be whatever 7,200 is minus our 3 months that we have expensed off. So we need to take 600 times 3, which gives me 1,800. And we need to subtract. And when we take 7,200 minus 1,800, we find out that we should end up with 5,400. So the amount of prepaid insurance after 3 months is $5,400. Or you could put after 3 months or at the end of March. If you wanted to write it that way too, that would work. And that is exercise 1411B.